Hi everyone, you are listening to the Kotak Securities Weekly Fundamental Podcast. I am your host Rini Mehta and let's get started. If we speak of the Indian markets, last week they rebounded mainly tracking global markets and also supported by decent earnings season. Sensex and Nifty gained more than 2%. Overall, if we talk, rally in the market was broad based with mid cap and small cap index also moving upwards. Sector wise, if we see, majority of them ended the week on a positive note, and BSE Metal Index was a strong performer, gaining more than 7% over the week. Apart from that, from the budget that was presented last week, the government provided for a decent capital expenditure for the financial year 23 and has kept central GDP at 6.4%. Guys, to know more about the budget and its impact on you, do check out our webinar by research team on YouTube. We have discussed its impact sector wise and have given a few stock ideas as well. Coming back to the other indicators, bond markets witnessed a sharp increase in yields. Globally, oil prices continue to gain strength with Brent crude now trading above the $90 per barrel mark. In India, FIIs have been net sellers over the past few trading sessions. So, what we think is that going forward, global markets will likely remain volatile depending on the macroeconomic data like inflation, central bank measures towards monetary policy tightening, bond yields, and oil price movements. And domestic equity markets is expected to track global markets along with the specific stock specific action based on quarterly result performance. On that note, let's move on to some stock ideas. Our pick of the week is GAIL with stellar performance. Guys, GAIL's third quarter results were well above our estimates, led by significantly higher than expected contribution from gas marketing and surprisingly resilient petrochemical contribution. We reiterate our buy rating on the stock with a revised fair value of rupees 195. We expect GAIL to benefit from elevated LNG and crude prices and uptick in domestic gas supply and consumption over the next few years. GAIL is currently trading at attractive valuations of 8.1 times FY23 core business EPS. So now if we look at third quarter performance and its updates, Titan had a blockbuster quarter. Titan surpassed expectations for top line as well as profitability. Its jewelry EBIT margin 14.7% was at an all-time high, was led by improved mix cost savings, operating leverage and one-time gains. Titan is making determined inroads into regional markets and strong progress in the wedding segment while expanding its customer base. Titan's attractiveness comes from one, in low market share in a large addressable market, and second is wide gap versus competition and focus on keeping its lead. We maintain ad rating with target of rupees 2525 on the stock. Moving on to Dabur, it also had a decent quarter. Dabur registered a 7% value and 2% volume year-on-year growth in the domestic business, led by resilience in healthcare and oral, and robust share gains in beverages. Dabur's new product development intensity is aiding growth to some extent and helping the company grow ahead of industry. It remains to be seen if this new product development surge meets with meaningful success and can sustain above industry growth. So we tweak our estimates and revise our discounted cash flow based fair value to 620 rupees from 650 rupees earlier. We maintain ad rating on the stock. Next is ITC. ITC had a well-rounded quarter. Its cigarette revenues grew 14% year on year and EBIT crossed an all-time high. Secondly, FMCG business grew 9% year on year, notwithstanding moderation of hygiene sales off a high base. EBIT margin at 5.9% is decent in context of inflationary pressure. And third is hotels business bounced back Well, paperboards and agri business EBIT grew 50% plus year on year. Overall, a good print across segments. Consistency in execution can drive re-rating from current levels. So we maintain buy with a target of rupees 282 on the stock. Guys, that's all for today. Don't forget us to follow us on Instagram, Telegram and YouTube channels for more updates like these. Thank you. See you next week.